There is nothing so useless as doing efficiently that which should not be done at all. Peter F. Drucker. My friends, we don't want to do anything that is useless, efficient or not. What we concentrate on 10 to 15 minutes a day is looking for price movement and efficiently following it. 10 to 15 minutes, that's all we ask. We don't ask for 2 hours on the weekend. We don't ask for an hour a day. We don't ask for 20 hours a month. We ask for 10 to 15 minutes a day. It's got to be each and every day. Why? Because you're not going to learn the nuances of price movement if you don't track these charts once a day. And once a day is enough. When you get into a trade, of course, you want to check the market 2 times a day. That's in the morning and in the afternoon using the half-day charts. Again, you're just monitoring what's up with the market. What controls is, of course, the weekly and the 2-day, the bigger charts. And we use weekly vertical crossovers primarily. That is where the price percent oscillator crosses over the red signal line. Typically means a big change in investor sentiment, going between fear and greed or greed to fear. And again, that's what we're looking for. That is the key. Now, let's jump into these charts, see what is going on. Basically, everything is up for the day. Nothing really big. And again, we're moving into the Christmas season. The market, the whole election thing is still hanging out there. So we'll just continue to monitor, see what's up. But what's good to see is we had that weekly vertical crossover. You guys remember that occurred back on Friday the 13th of November. The next week, a little sketchy. The following week, still not peaking higher than we had been previously back on the 13th. The high on the 13th was that is that week, 364.38. 362.78 the following week. That next week, 364.18. Then last week, we started to knock it up, 369.85. And of course, so far this week, 370.78. So it took it a couple of weeks to really sort of take off and get moving. Price percent oscillator pulling away from the red signal line, derivative oscillator gaining upward momentum. Go to the 2-day chart. Again, continuing to try to move up a little higher than the prior. Now remember, Monday was when the last candle drew, and then Tuesday, and of course Wednesday is when this next candle is going to finish drawing. So again, trying to move up. Derivative oscillator losing a little momentum. Looks like the price percent oscillator losing a little bit, but still heading up. Half-day chart. Let's see, where is it technically? Just dead even. Price percent oscillator below that first horizontal gray line. You see PPO 1024. Those are the settings on it, the 1024 period settings. 0.95 below that. Exponential moving average 8 period. That is 0.95, so it's just laminated right on there. Again, nice green up candle at the end of the day, so we'll continue to watch and see how things continue to develop. Let's move from the S&P 500 to the Nasdaq 100 as represented by QQQ. That's nice, reaching a higher high. Price percent oscillator trying to pull away from the red signal line. Of course, guys, when we looked at it last week, we have now seen, now again, if you look over at the PPO again, you guys remember it was laminated. It was right there the same. It's gotten larger. Why? Because as the price percent oscillator pulls through further, it actually goes back and sort of changes its position. It was even, we didn't have an actual weekly vertical crossover. I know it was laminated. Some of you went ahead, pulled the trigger. Don't have a problem with you practicing that as long as you learn from it. Hope you're filling out your trade worksheets as this moves along. May end the week with a weekly vertical crossover, derivative oscillator gaining upward momentum, price percent oscillator trying to pull away. Don't have a weekly vertical crossover yet, but it is a nice up week so far. 2-day chart, price percent oscillator heading up, derivative oscillator gaining a little momentum, and again reaching a higher high first day of the latest 2-day candle. Then we can see on the half-day chart, just sort of running parallel on the price percent oscillator. Derivative oscillator might be losing a little bit of energy. We can see it was a little iffy in the morning and then moving up in the afternoon, just continuing to move right up that half-day trend line. That is good to see. That's where we are in stocks right now. We're going to leave stocks, go to bonds. Bonds up 0.47%. Now again, we have a red down candle that's forming, but pay close attention to the wick, not getting anywhere near the low of the prior week. That's one reason price percent oscillators losing a lot of the energy that it had. Derivative oscillators about flat on the weekly chart. And again, we will wait to redraw our weekly trend line. Why? Because we really need this candle to finish forming. We can't use a candle that's not yet finished forming to draw a trend line, and we really need to be able to connect two candles. We could connect the old green candle, but I really like when we've got downward moves, I like to connect red candles. So we'll just wait and be patient. We go from the weekly to the 2-day. Now the 2-day was heading down, but this latest 2-day candle, green candle forming up, just sort of laminated right there. Derivative oscillator is negative. That's oscillating down from those 3 prior down candles. So we'll see how this candle finishes drawing. Maybe TLT will continue its down move on Wednesday. Don't know. Maybe this will turn red. Maybe it'll stay green and get bigger. We'll just wait and see. Now, do remember, we had that weekly vertical crossover in effect from way back, way back, all the way back. Look at this to, let's see, what is that? May? Midway through May? That's when we had it originally crossover going down, went down for 4 weeks, then up for many weeks, and then since then sort of tracking down, still tracking down. We're waiting for a potential 2-day recross. We'll see if that occurs. It might. If so, then of course we typically expect bonds to be going down when stocks are going up and vice versa, because bonds tend to be a safe haven when the market's not doing well, and people want to have their money in bonds rather be in the market when it's going up. That's why they tend to move inversely. So we'll wait and see how things continue to track through. Let's look at that half-day chart. What's it doing? Booming up in the morning, pulling back a little in the afternoon, did cross over going up. So we'll continue to watch, wait and see how bonds continue to sort themselves out. And if we have that 2-day recross, keep your eye on that, particularly tomorrow around 3:50 p.m. in the afternoon as that 2-day candle is almost drawn. Now, we're going to leave bonds and stocks. We're going to head to gold. Gold up 0.35%. Gold has been going down for quite a while, particularly since we had that weekly vertical crossover going down back on September the 11th. This is the first, no, it's the second green up candle that we've seen now. This is not a drawn candle yet. It's forming. It could change, but we do see a green up candle sitting right there on that prior trend line. And again, not a super good trend line. In fact, one that would be more accurate would probably be the closest we can get. And again, no good, really good trend line. Why? Because we're not connecting 3 candles. That's the way we prefer it. But we look at the price percent oscillator. It's flattening. Derivative oscillator losing downward momentum. Green candle forming. Go to the 2-day. Of course, we're into our 5th day of strong up movement in gold. It looks like we may very well at the close of this latest 2-day candle have a 2-day crossover going up, which would of course take us out of a down trade in gold. Why? Because we have to have the 2-day and the weekly moving in the same direction to consider being in a trade. And once that changes, then of course we could wait for potentially a 2-day recross going down, as we saw that did quite well for us back on the 9th of November. Or there might be enough up movement that finally it rotates over the weekly vertical crossover and we can jump into gold and hope it goes up to 15,000 as we were told all the way back when gold peaked back in early August. It was going to. So we'll wait and see. I can't wait to jump back into gold on a practice trade. What do we see on that half-day chart? Again, it's been going up for quite a while. Up in the morning, not quite as much in the afternoon. Overall, gold up a mere 0.35% for the day. That's where we are, folks, as we end the day. If you don't have our book, Charting Your Way to Wealth, you want to support the work we do here for free at the channel, buy the book. Also, Patreon members. Appreciate our latest Patreon members. Of course, lots of great stuff for you. The main thing, one of the most popular things we have for any three of our levels of Patreon support is that three-part training series, Options Made Simple, The Charting Wealth Way. And I think it's the best course. It's for free to our Patreon members as one of the bonuses, along with all the short chart trading, the long chart trading, the Bitcoin trading, all the stuff that we have for you to practice trade. That's where, and plus the once a month call-in live training session we have for our Patreon members. We help you review the stocks, ETFs that you're interested in, answer your questions so you can be more successful in your practice trading. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.